Hey everyone, John Henry here, Slingshot Futures Trading Group. Welcome back. Hopefully you're having a great weekend. Hopefully you had a great trading week behind you. And now we get to take a look at our weekly futures, stocks, and Forex outlook for this week, the week of 8/23. All kinds of cool stuff going on this week, fingers crossed we can get some halfway decent movement. So before we jump in, as always, underneath the video, make sure to like and subscribe and favorite. That way we know when all the videos are coming out, and that way we know you like the content. If there's anything that you'd like me to cover for you in the comments section, feel free to drop a couple of those in there, and that might end up being the next video. If you have any questions, feel free to shoot me an email, jhb@ssftg.com, and don't forget to check out the free 3-day trial right on the front of ssftg.com as well. So, without further ado, let's jump on in. Taking a look first here at the S&P. The S&P, last week we were talking about how the market was looking for those upward objectives, and we have come up and completed those objectives. We're coming up to them almost to the tick that first time around, up towards the almost 3,400s, backed off a little bit, came back up, and just been sort of chopping around. But we are right at that major zone of interest. The big thing that stands out here is that buyers seem to still be buying. They're just not letting the market pull back at all, where we've got all of these little tiny wicks showing up all over the place, but it's not really sticking around. So when we have that type of situation, eventually there's usually going to be a pullback, because there always is, but we haven't seen that yet, and it's been very slow and grindy while the market's working its way up towards those, new all-time highs on the S&P and the NASDAQ, and it's just kind of grinding along. This feels very similar to the price action that we had before anything happened. If we look back in October, November, I mean, this is the same thing. So if we zoom forward and we get rid of, all the craziness, this looks like the same thing. So it's all situations kind of normal from what we're seeing so far. Market does seem to be a little bit overdone to the upside, and realistically it would make sense to see the market pull back. We haven't come back down towards the channel lows in a while, and we are cycling off of major objectives on the highs, but it doesn't pull back. It just keeps going higher. So as long as that's the case, buyers are looking to buy the dips, and they're looking to come in on the cheap. Nobody wants to buy high, but when the market doesn't pull back and it just keeps going up and up and up and up, that first pullback kind of shakes the cage a little bit, and that's why they can be so extreme, because people aren't expecting it to pull back very far, and then when it finally does, it knocks out a lot of people, when in reality that dip is just another buying opportunity because the market just keeps going up. Either way, the S&P coming in, we're looking at kind of sitting on top of resistance at the highs. It would be good to see it back off a little bit, but likely buyers will just keep coming on. It would be very nice to see it dip back down towards the channel lows. Next up, we've got the NASDAQ. The NASDAQ is working its way higher, and again, last week we were talking about that repetitive patterning all over the place on the NASDAQ. Measured leg, measured leg, measured leg, measured leg. They're all over the place. Obviously, the NASDAQ is just rip-roaring into all-time highs. It's doing pretty good so far, this overall move up. But looking historically here, whenever we've had this really nice drive to the upside, it's usually met with a kind of a sharp two-legged correction back down again, which we haven't seen. We've had the V-bottom correction back up, but we haven't had that move, that pullback. And usually after that pullback is when things continue to go on their merry way, a little bit choppy, sloppy. But here we see the same thing. We have a very sharp V-bottom all the way up to new all-time highs, but we have not seen that ABCD correction back down again. The market is extremely lofty up here and needs to really just kind of pull back and get into some value. They pulled back very deep. Now they're running back up towards the targets. Likely the next pullback that does happen isn't going to be as deep. We're going to see them kind of shallow out a little bit. Still means that 10,500 dips could be possible, but more likely than not, buyers are going to be all over that if it dips that far down. It's a buyer's market right now in the NASDAQ, and it just keeps going up, all-time high, bear trap, bear trap. Next upside objective is going to be the top of the channel. We've got two different channels. We've got the black one, which is the wider one that's been around for a while, and then we've got the blue one kind of inside of there working its way higher, and they're both gunning towards the highs. Short-term repetitive measured moves have already been taken out, but the wider measured move from the most recent leg is still looking for completion, kind of getting up into those 11,750s going into 12,000s. Already kind of crazy that we're talking about that, but it's still going up. Sellers are still trapped, and the first pullback that does actually eventually happen a little bit further down is probably just going to get slammed by buyers anyway. You just got to wait to buy cheap. That's the biggest thing with these rip-away markets. You don't want to buy high because it typically doesn't take very long before it to pull back. It just gets stuck at the high and grindy. But if you can grab that pullback, that's where the good ones are. And then finally over to the Dow. Now the Dow, we were talking about a second leg buyer's move, meaning we broke out of this wedge. We had a great break in a very tiny little flag that showed up there. And with that little bull flag, we're trying to break outside of the high after dipping lower into that second leg buy zone. We did achieve that measured leg to the upside, so it does make sense to see some profit taking there. But this is very obviously profit taking. This isn't new sellers. If it were new sellers, you'd see big bear bars, or at least good weighted bear bars, meaning that they're closing low in their range. In this case, it's just a bunch of choppy bear dojis. It's impressive that they had that many back-to-back days of bearishness and it didn't do anything. But, I mean, realistically, one good bull day has completely wiped out all of that bearishness. It's very likely that this is nothing more than profit taking and we're looking for another leg up, probably to at least retest 28,000, but we do have some major upside objectives creeping into the 29,200s way up there on that measured leg. So there's a lot of definite interest if the market can keep going up. There's a lot of potential movement here for the Dow, especially with the Dow because it's back a ways. The Dow isn't at all-time highs like the NASDAQ, like the S&P. It's hanging out behind a little bit, which is, to be fair, very kind of we're used to that when it comes to the Dow. That's sort of its attitude, but it usually does eventually catch up, and it wouldn't be a surprise to see them catching back up towards those all-time highs, and who knows, maybe we'll see 30,000 around the corner not too far. All right, jumping over to the stock side of things, first one on the list is AMD. That's Alpha Mike Delta. Very, very strong mover to the upside. Obviously, AMD's been doing phenomenally well. They were trading in the 40s earlier this year, and now they're trading in the 80s. I think they're pretty happy with how the performance has been so far. One of the big things that you want to look for when they're breaking away like this is this sustainable? Are the buyers able to maintain this strength to the upside, or was this just a big seller's squeeze, right? A short squeeze, and now that they've been taken out, the market's going to roll back over. And you'll usually see those big footprints in the volume, and that volume really told us what was going on here. There is a ton of volume, and every single one of them, most of it happening on those giant bull bars. In the subsequent day after that, there's significantly less volume and no movement. So they're showing that nobody wants it up here. Everyone's buying it still, and it's still ripping higher. Finally found a little bit of consolidation here between 75 and 85, chopping around, which created a very nice little pennant formation. The market broke down and then cut right back up again, creating an extraordinarily strong bull move potential, with volume increasing, showing that buyers want to try to take it back up to the highs. And along with that, it's coming off a rising support. Everything lining up for a potential long on AMD to see if they can go back up, maybe hit the 90s. Who knows with AMD, maybe 100. You never know these days with these tech stocks, but definitely on the horizon for a potential long move, squeezing in towards that big $90 to $100 mark. And then the next one on the list is MYRG. That's Mike Yankee Romeo Golf. Very nice move to the upside here as well. Good strength. And we're kind of breaking out of a previous zone of congestion. You can see that pretty obviously. Sellers were trying to hold the market down right around that 35 area, and they have officially cracked through. Buyers are looking to buy this dip. It's obvious that you don't want to be a buyer up here. There's a lot of wicking going on around that $40 mark, which is probably going to be a big objective. The market is beginning to pull back, and we're starting to show some support down here in the 36s, 37s, and this is where initial buyers are going to be trying to come in to push the market back up. Obviously, the big zone of interest is going to be dipping back down into the 35, 36s, where we see all of this volume already, but it's a very good sign seeing a lot of volume coming in at a level of support with an almost nothing bear bar. That bear bar accomplished not a whole lot other than just making sellers not so happy about the move. And if you look in a really kind of fuzzy way, you can almost see a descending wedge here that could be waiting for that nice little breakout to the upside and continue on its way back up towards 40, maybe break out above that. So I do really like MYRG for a possible long, but I've got to see a little bit more context here. We're still in this holding pattern. Can they break out of it in the coming days? That's going to be the big question. And then finally on the stock side of things, VEL, that's Victor Echo Lima. Big move, gigantic bull bar. But the thing that really stands out here is the volume. And you can see I have it marked with a question mark. It's very interesting that the two biggest chunks of volume happened right at the beginning of when the stock started trading and also down here. It would appear as though this kind of movement would be indicative of buyers attempting to average down. This doesn't necessarily mean that it's time to go rocket ship mode, but every time that this market has put in a big bull bar, it usually follows through with some continuation over the next few days, or it just kind of hovers and stalls. The big caveat to this one is that there's potentially a couple different wedges setting up, which would be looking for support at the lows, but we're closing right inside a weird little wedge pocket that's making this a little bit awkward. So seeing them break a little bit further would be a little bit more necessary, but if it is traders who are looking to kind of create an average down scenario, then you've got all of the volume here, right, on that candle. And I'll just cut that candle in half and just say right about there. And then we've got this candle right here, which means at a break-even point somewhere in the middle, hovering ahead of 10. So this is only trading at 527. There's still potential movement for a great leg to the upside. It just kind of depends on what they do here with this wedge. It's got potential. It just needs a little bit of extra oomph to kind of finish the job here. All right, then we jump over to the Forex side of things. First up with the Euro USD, we are cycling off of that massive zone that we've been watching for a while now, that kind of empty pocket, that open door. It seems like sellers are definitely trying to position themselves. We have a 3-press high, multiple measured move completion levels up here, and a giant zone. More likely than anything, sellers are just trying to get this to push back down, which would be buyers taking profit in a logical area. We saw the same thing happen over here, where the market tried to break higher, stalled out for a little while, and then ended up continuing anyway. So it wouldn't be a surprise at all to see maybe a little bit of a deeper dip. This didn't do a whole lot, maybe seeing the market challenge that just a little bit more. If you were looking at equidistant pullbacks, you could measure that one there and park it right up on that. And we're getting close to that equidistant pullback zone right around that area. But realistically, it would make more sense to see something maybe just a little bit bigger to kind of equalize this gargantuan move to the upside. And that's where major support comes in, down back at 1.14. It might take a couple days to get there, obviously, but if we can get that pullback, that's going to be the big spot of interest between 1.3 and 1.4 that buyers are going to be looking to bounce back up towards that big break of the 1.2. All right, and then next up, we've got a little bit of a messy looking chart, but the dollar-yen, and we've got a little bit of a range that's attempting to form. Last week, we were talking about the market wanting to get a measured leg to the upside after missing a break-even point down here of trapped sellers who've been stuck for like a year. They missed it, rocket ship to the upside, expecting to see 2 legs up, which, to be fair, we did get 2 legs up. It did do that. But it didn't do it as much as I thought it would, which is a big clue. That in itself can give us some information. The market didn't go as high as we were expecting it to, even though realistically, with that many sellers who should have been looking to take profit and getting nervous by this, that should have been more than enough fuel to drive the market higher. It still seems like sellers are trying to hold this market down. They're not allowing those upside objectives to get filled, and we're holding inside these major resistance zones. Right now, we just came out of 106.683 to 107.202 and cycling down. ABCD leg correction would push down back into where the wick was before, and that's back down to the low of that big bull bar that trapped or came near that break-even point, 104.185 on the low. It's only got to go a few more ticks below that. So logically then, a lot of buyers are going to be buying in here ahead of that around the 105. I have 104.96 down to 689. But buying inside that area looking for a continuation bounce because they know if this low breaks, it's probably going to flush more. So that offers up a very good risk-reward situation where you can buy in fairly low in the range with a stop somewhere below the lows, but with an upside objective back to the highs of the channel and further. So it's not very likely going to work. The probability's not good. You're asking the market to go much further against what it would normally want to do before it hits your stop. But the risk-reward is fantastic. So it just kind of depends on what the market wants to do here, but it seems like the dollar-yen has a little bit of extra bearish pressure that is kind of hiding at these highs. So we've got to wait and see a little bit more as to what the market wants to do here. Are the buyers going to defend a higher low and break out, or do the sellers have that lower high and we just keep kind of breaking down and kind of going in this much wider sideways range? It's going to be a little bit messy on the dollar yen for a while, it seems. And then finally, to wrap everything up, we've got the dollar CAD. Now, the dollar CAD is, man, the price action's getting a little bit lackluster here over on the dollar CAD. Going very, very sideways, congestive, and in a logical place where you would expect that. Zoom out a little bit and look where we are. Well, if we put a line on current price, you'll see why the market's going so sideways. We're starting to push into some serious zones of support here. Buyers have a lot of interest in this 1.3, a little bit ahead of 103, or 1.3 rather. So, I mean, the fact that we're just starting to dip into this area and it's already showing signs of bullishness, pretty good clue that if the market starts going sideways, we're seeing accumulation buyers doing what they've been doing since July, buying the dips, looking for that rip. To be fair, any buyers who were in this move, who had this monstrous rip up to 1.46 or a little bit above, probably took profit. Can you blame them? You know? But now that we're starting to come back to the same area where it broke out of before, a lot of people who missed that train are going to start looking for reasons to get back on it to hopefully not miss the second run. We'll have to wait and see if that second run shows up. We need to wait for some consolidation, some proof, but we are nearing into some major, major zones of support for the dollar CAD to start bouncing off of. All right, so that's going to do it for this week's outlook, going for the stocks, futures, and Forex for the week of the 23rd. Potentially a very interesting week ahead of us. You just got to play it a little bit safe. But as always, hopefully you find this useful, interesting, entertaining, something you can use going into this week ahead of us. I hope you have a great week ahead. And if you have any questions, feel free to shoot me an email, jhb@ssftg.com. Otherwise, until the next one, enjoy, rest up, and we will see you all then. Thanks.